Right, on to the US data points. What caught your eye here? What catches your eye here?
Well, we've got, it's the final revision of US GDP. If we see any kind of slight upside there, I mean, they saw the first reading saw a contraction of 0.7% last time round. But expectations are for a bit of a revision closer to minus 0.2%. So that kind of, any kind of strengthening of that US GDP number, we'll see a strengthening. I mean, obviously, we'll see a strengthening of euro dollar. We'll see a bit of a strengthening there. But also, we've got these personal consumption expenditures, which are expected to kind of roughly hold. As we've seen a bit of a weakening of US data, and that kind of slight concern when you look at the Fed. The Fed keeps talking about being increasingly data focused and increasingly data dependent. So we want to start seeing the people, especially in this lower inflationary environment, and where wage growth isn't necessarily as strong as you want to see. You want to see people going out and spending, because in this kind of disinflationary environment, the risk is not that consumption drops because people are deferring purchases. People don't think, I'm going to wait until 6 months' time to buy a fridge because it'll decline by 0.5% in its price. People don't behave that way. The risk is that people defer purchases because they're feeling squeezed because of wages and an inflationary cycle. And so we're not quite in deflation in the US yet, but we want to start to see some strong numbers in that expenditure. And you want to see people going out buying things and not deferring purchases.
Okay.
In terms of crude stocks, we're going to see a slight slowdown in the deceleration there. It fell 2.6 million barrels last time. Looking for a slowdown to 1.8 million this time. So that's the kind of general trend we're expecting to see when those numbers are out later today.
All right then.